I'm Corbett Wall with DV Auction, here with your feeder flash for Monday, October the 10th, brought to you in part by Macrocin by Bimeda. Macrocin has proven efficacy at an affordable upfront price, without the BS, end of story. Go to macrocin.com to see head-to-head comparisons with Pioneer products. Also, Joplin Regional Stockyards, they're going to have about 5,000 head for the regular Monday feeder cattle auction here, starting early this morning on Monday. But markets have been pretty tough around, guys. But people are still wanting cattle. They just don't have anything to feed them. But pay attention to the market there. If you think that you'd like to buy some cattle in Joplin, go on to dvauction.com. Call them ahead and get registered there so you're approved to bid. Also, this Wednesday, they got a special cow sale. Those have been going really well here the last several months, but their monthly special cow sale is going to be this Wednesday, the 12th, at 4:30 in the afternoon after they get done selling all the weigh-ups. Feed, or the lack thereof, is what this edition of Feeder Flash is going to be about. There's demand for cattle. Of course, our numbers are tight. Our numbers of market-ready cattle are getting tighter, and we're starting to see that. They're getting progressively tighter, and we see your packers having to come in and pay more. They're waiting until the very end of the week, and they're giving the highest prices at the very end of the week. Yet when we start back at the start of the week, they want to start all back over again. And our feeders, especially in the Midwest, in the northern plains, the ones that still sell negotiated, they've got to just bolden up and understand that things are working in their favor. We got tighter supplies, we got better demand, and so there's good demand for feeder cattle, and there's good demand for calves in owning them, but they don't have any place to put them. Your calf prices have fallen hard in the southern plains, not so much in the northern plains. They've got some grazing in the northern plains. They've got things that they can feed them in the northern plains. They've got silage. They've got hay put back. They've got things there, and they've got some grazing up there. Now, maybe not as much as they normally would have, but probably more than any place else in this country does, except for the southeast, because they've been really wet. But it's even starting to get dry, you know, on the east side of the Mississippi River, and we talked about that last week. How our Mississippi River barge rates are up 50% over a year ago. It's gotten so dry that it can't handle near the traffic that it's used to, and it's going to put a bind on our export shipping. And the freight going out of there. It's likely going to crimp your grain prices, which that would be a welcome thing to cattle feeders and the cattle market. And we're going to see that's really kind of caught in a hold, this Mississippi River dryness the last several days. And so we may see your grain markets kind of take a hit from that this week, because it's just now really getting advertised in a big way. But we hate it for our grain farmers there that are not getting to enjoy all of the good market that they have for their product. But you just talk about what feed's costing. These cost of gains are going to be, and are right now, from $1.20 to $1.50 a pound. And so we've got to back these feeder prices up a little bit. We've seen that feeder heifers, did not go down as much as steers this past week. Every time that happens, you see there's still demand for feeder cattle. They're just getting more price conscious. So they start going into your heifers just because they don't cost as much. But we haven't seen cost of gains like this for many, many years. And it's going to get worse as we go forward. We're kind of waiting to see how much corn we have whenever we get through with harvest here. We've been in the biggest part of harvest here for the last week or so, and they're going right through. Your elevator bids in the Corn Belt, up in the Midwest and in the Corn Belt, are mostly now negative basis. So they're paying at or just under what your Chicago Board of Trade December corn futures price is every day on those loads that are coming in. But you start getting away from there and freight's higher because fuel prices are higher, everything's higher. We know that. You get down into Kansas, your terminal elevator bids in Kansas for corn, which they didn't take them long to go through harvest up through Kansas because there just wasn't a whole lot there. But those elevator bids are running from 45 cents to $1 plus over what your futures price is. And delivered right to the feedlots, which some people do that right in the area there, they are paying $1 over on the basis bid there. And so, you know, your grain being unloaded at your feedlots, the ones that take that, are paying $7.83 as of Friday. So you get down into Texas down here. Of course, we've had a little bit of irrigated corn, but for the most part, it just costs so much to irrigate it. You've got that in it, and you need that price back to pay for that. But 90 cents to $1.50 plus basis bids at your terminal elevators in Texas Panhandle, and you go to your feedlots, and they're paying $1.95 to $2 over what your Chicago Board of Trade price is with those basis bids. So your cash corn unloaded at the feedlots, 8.08 and a quarter cent a bushel to 8.18. That it costs quite a bit. You know, a good friend of mine, Billy Simmons, explained that to me. He said you can always pretty much figure what your cost of gains are going to be roughly. Just double that front price of corn. So if we've got $8 plus cash corn, it's going to cost them $1.60 to put the cost of gains on. And I said we're running 120 to 150. There's going to be some cattle that don't perform that well, especially some fat calves, that it's going to cost $1.60 plus for every pound that you put on them in the feedlot. It is hard to back cattle up that much from your feeder cattle cash price to what your fat cattle market is, and it's hard to make those work. Now your farmer feeders, of course, they've got the advantage, and I've never heard a true farmer feeder tell me that it cost him more than $1 a pound for a cost of gain. Now, likely he's not figuring as much stuff as some of those commercial feedlots, but you'll never have a farmer feeder admit to you that his cost of gains are over $1. Of course, he's doing a lot of the work himself, but there's opportunity costs on that stuff too. You know, we saw several years ago, whenever corn get really high, that a lot of those farmer feeders decided that it was easier just to lock the gates on their feedlots and go to Florida or somewhere like that for the winter. And we're likely going to see a lot of them do that. But we've seen some premium feeder cattle sales late in the week this last week with some impressive prices. And so that's telling me that those farmer feeders are going in there and trying to take advantage of their advantage on feeding cattle because they've got their own corn right there. But talk about your board for last week. Live cattle futures. Your October contract, Monday was up $1.05, Tuesday down 12, Wednesday was up 47, Thursday up 65, and Friday was unchanged, with October live cattle ending the week at 145.32. That was up 205 for the week on your futures, and we haven't seen a lot of investment from your funds and from your speculators in the cattle futures lately, because we've seen inners get higher and safer things are starting to pay enough to make a difference now, and there's volatility that they feel like they can take advantage of somewhere else, and they don't have any confidence in the cattle market because they've been hearing that we're on tight supplies, yet we haven't seen your fat cattle market really show that yet. Well, I think we're about to get there. But like I said, we haven't seen 150 on fats yet, even top price direct in the country. I'll have to see it to believe it, but I think we're getting closer. December live cattle ended the week at 148.05, and that was up $1 smooth. October feeder cattle contracts, Monday was up 135, Tuesday down 87, Wednesday up 190, Thursday down 82, and Friday down $1, with October feeders ending the week at 174.72, and that was up 55 cents for the week. November feeder cattle futures were just like December fats. They were up $1 for the week at 175.62, Look at your grains, corn, new crop December, 6.83 1/4, ending the week, and that was up 5 3/4 cents a bushel for the week. So not a lot there, even though we did see a little bit more volatility, but it's just been going, you know, a half a cent or a penny this way and that away while we're going through the biggest part of harvest. Beans ended up, after quite a bit of volatility later in the week, up 2 1/4 cents a bushel at 13.67 to end the week. Fat cattle trade through Thursday, we saw 73,000 head trade, pure negotiated in your 5-area feeding region. That was better than we thought. There was a lot more trade Thursday after hours than what we thought. They turned that in by 2 o'clock, and the trade was just really getting going at 2 o'clock. So a lot of that didn't get turned in till later. So on our last visit, we didn't have all the results of that. But up through Thursday, your live sales in your 5-area feeding region were $1 to $3 higher, from 143 to 149. We saw a live steer weighted average price in your 5-area feeding region at 145.97. That was up 79 cents from the end of the previous week's weighted average. Dress sales steady to a buck higher from 227 to 233, but your weighted average on dress steers was $1 higher, about at 230.19. And those prices are going to be higher yet. Those weighted averages are going to be a little bit higher yet to finish the week, because we did have a little bit of Friday trade. And the Friday trade that I was expecting actually happened late on Thursday last week. But Colorado Confidential, not enough trade activity to see that. We're going to start seeing that in some of the other regions of your 5-area region there, because we're just not going to have enough trade for the confidentiality rules of mandatory price reporting. Iowa sold 4,200 head confirmed on Friday. For the week, 29,400. That's pretty close for them to normal. Live sales on Friday from 147 to 149. Dress sales at 232. Nebraska, about 1,000 head confirmed on Friday. A little over 29,000 for the week there too. So pretty decent trade in Nebraska. Live sales 146 to 148. Dress sales at 230. Kansas, about 100 head. Less than 10,000 for the week. They usually do better than that. And that was our low spot for trade activity, was Kansas, because normally they're up in the teens, but only 9,600 there for the week last week, but usually well over 10,000 head. But had some confirmed sales, just a couple of loads on Friday at 143. But your market in the Southern Plains was 144, and that was a buck higher. And that's the highest price we've seen confirmed and established in the Southern Plains since 2015, when the market was retreating from the all-time highs of 2014. So it's hard to really complain about that. But our top price paid in the Southern Plains was 144.5, and that was done on the Fed Cattle Exchange online fat cattle sale, where you get a little bit of competition. And that's what I'm all about, guys, and I preach it all the time, and I realize most of you guys that watch this understand the importance of competition, but it seems like a lot of our bigger corporate feeders don't anymore. They just want a sweetheart deal, and they just want to know when they can ship their cattle and know there's plenty of room for them. But Texas, a little over 100 head confirmed on Friday, a little over 10,000 for the week, so it's odd to see Texas move more cattle than Kansas, but Texas had 10,200 head sold, but just some mixed cattle on Friday, so you can't really test the market. Box beef cutout values were a little bit higher on choice, but lower on select. We're starting to find that bottom, that seasonal bottom on our box beef cutout value prices, and we should start seeing them shore up quite a bit here, either this week or next week, and then start moving a little bit higher. But your weighted average on all of last week's sales on choice cuts ended at 246.89. That's your weighted average. That was up 16 cents from the previous week's weighted average. Late sales on Friday were just a little bit under that at 246.07. Selects, and they've been so volatile of late. Your select box beef cutouts but your weighted average on all of last week's select sales come out to be 219.11. That was down 162 from the previous week's weighted average, and your late sales on Friday select cutouts were about $3 lower than that at 216.13. Choice select spread is $27.78, and we saw this all based on 726 loads of cuts, grinds, and trimmings, which is a little bit more than we normally see on the spot market. Slaughter for last week it continues to be aggressive. Things have been working good in your packing houses. They've been going right through them, and even though we're getting tighter on numbers, they're still making money, and they're going right through them, guys. 664,000 harvested last week. That's the same as the big week we had the week before. And there was only 36,000 harvested on Saturday. Most of these plants, especially down the Southern Plains, have stopped Saturday kill for right now, but they're running so good through the week that we're still getting big harvests. And that 664,000 last week was 17,000 more, or just 7,000 more than the same week a year ago, because they had a bigger Saturday. But talk about what else is going on. DV Auction, that brings you the feeder flash and Cattle Market Central, and we broadcast about 150 weekly feeder cattle auctions and cow sales every week. Our main deal is production sales. We do seed stock sales, about 1,500 of them, and we're starting to get into those fall seed stock production sales. We're doing a lot of horse sales, doing a lot of sales like that, catalog type sales where people can go online and look at all that information, get the EPDs, and basically shop online before the sales happen. But our DV Auction production sale report for September, and that's kind of a light month. We had 11,200 bids in our production sales. We sold 1,376 lots last month in our production sales, and that added up to be nearly $4.8 million. But as we go through the bulk of the fall, we're going to see more production sales, and of course that pales in comparison to our amount of spring sales, because that's when the bull sale season really is in February, March, and April. But let's talk about your feeder cattle market for last week. Your real-time index on DV Auction ended the week last week at 173.15 based on an 800-pound cash steer up through your middle 12 states. That was down $1.18 compared to the previous week's end. But look how much higher CME cash feeder cattle index is. Normally those run just pennies from each other, but it's still nearly $1.75. And you think, well, how could that be if they collect the same information? Of course, we're in a lot more sales than your government market reporters, but it's basically the same type of information on the same type of cattle in the same area. But in the fall of the year, like it is right now, you see more cattle sell off the market in your sale barns, and it's just human. I wouldn't necessarily say human error, but it's just humanly that some of those cattle that sell off the market don't make it into those government market reports done by the Federal State Market News Service. They forget to put them in, or they don't put them in on purpose, or they downgrade them somewhere where they don't go in the index. And so it's keeping your index inflated a little bit. Our real-time index is done automated, and it doesn't have a conscience, so all the cattle go in there. So those cattle that sell off the market, what happens to those cattle? They feed right down the alley from the cattle that are in the index. So I think they should be in there, but for whatever reason they're not getting in there, and that's why you're seeing the difference in price between those two index values. But your cash feeders for last week and your brick and mortar sales were $1 to $3 lower. Heifers maybe not quite as bad as the steers. Didn't see such sharper declines in your trends, but it wasn't from people buying replacements. It was from people just being price conscious and wanting to buy something a little bit cheaper, because we have yet to see anybody get aggressive in buying a replacement cattle or replacement heifers to keep back. Of course, they'd be lighter calves, the ones they'd want for the most part. And your calves were weak to $8 lower in your sales last week. You know, even in the northern plains they were lower, but they're selling a lot higher prices than they are in the southern plains because we don't have anything for them to eat in the south. We did get some moisture in the Texas Panhandle the end of last week. Not a lot. You know, from 30 hundredths to an inch, I would say, in most areas. It was a little bit spotty, but it doesn't take a lot. And for those that got the inch on their dryland hard red winter wheat, it's going to make some difference, but we'd like to get a little more, and we do have chances here early in the week, and not sure how far it went over into Oklahoma, but I think maybe it just kind of grazed western Oklahoma there. But look at your bigger stick out sales late last week and over the weekend. How about Gordon Livestock Market in Gordon, Nebraska? About 1,900 head of feeder cattle. Hadn't had a good recent test there, hadn't had a sale for a while, but look at this stick out sale of fancy steer calves in Gordon, Nebraska. 205 head, 538 pound steer calves, bring 221. Fort Pierre Livestock Auction, Fort Pierre, South Dakota, 3,700 head for them. The trend was a little bit difficult. They'd had their big anniversary sale the week before, but lighter calves were some higher, heavier calves were some lower. Yearlings not well tested, but it was still an awfully good sale in Fort Pierre, and they're going to have a big sale this Friday there at Fort Pierre Livestock Auction. Don't forget it. But talk about Crawford Livestock Market in Crawford, Nebraska. 6,500 head for them. Big sale for them, big sale for anybody. It was mostly calves, but look at these lots. This would be our Zoetta stick out sale of the day at Crawford Livestock Auction, or Crawford Livestock Market they call it. Mostly calves, but look at these lots of 100 head or more. I mean, very impressive there, including 114 head of 443 pound heifer calves that bring 208, and 153 head of 468 pound steer calves bring 250 and a half. Wow. Give you some individual quotes. How about out west, Nevada Livestock Marketing in Fallon, Nevada, where I was at on Friday? We had a nice snappy sale there, plus raised $45,000 for the Adam Laxalt Senate campaign there while we was there with a lot of donated livestock, and we appreciate those guys that did that. But we also had a stick out sale for Fallon, Nevada, where it's dry out there and there's not a lot of grazing demand from California because they haven't seen any moisture yet. 59 head of steer calves weigh 592 at 190.50. That'd be a pretty impressive quote for there. How about Dunlap Livestock Auction in Dunlap, Iowa? The Shaven family there sold 69 head of steers, weighed 908 at 179.75. Crawford Livestock Market, Crawford, Nebraska. About the only yearlings they had there, with the highest ones I've seen anywhere for a while. 181 steers weighed 849 at 191.50. And the most impressive quote I saw late last week, your Mackerson, no BS, top quote for the day, come out of Fort Pierre Livestock Auction, Fort Pierre, South Dakota. It was 223 head of fancy 504 pound steer calves. They bring $2.46 a pound. And that's your feeder flash for Monday.